Hello everyone and welcome to Day Trader S&P 500. Today is July 8th, 2021. This is Dale Woodson, editor of Woodson Wave Report. You can see our honor roll and top 10 market awards from Timer Digest along with our disclaimer there. I want to let you guys know about our subscription service here. But we can just get right into it. We've got a couple new things. We have a video on demand page. You can see right here I've uploaded how to trade a 3-wave correction after a 5-wave move. There's a Bitcoin analysis, GameStop, and our classic crashes, which details all the crashes from 1929 to 2008. Plus we have a Guess the Dow contest. Guess the S&P contest, which you guys can compete in if you want. Just click on the subscription tab and it's underneath there. Okay, I want to thank you guys for subscribing to the channel. Remember to hit the reminder bell and don't forget the like button down there. And since it didn't come up, we will show a picture of what it looks like. It's down there. It's a little bit smaller than this, but it is the like button. Appreciate all the patronage to the channel. Okay, we're going to look at the S&P and we're going to look at U.S. 10-year yields because they're in the news, and we put something out about it just the other day. I think it was yesterday with our subscribers to our monthly subscription. I think I may have gotten that in there. Oh yeah, here we go. There's the subscription services, the annual, the monthly. There's the new video on demand that we set up at the beginning of this month. We also have YouTube 10% discount. You guys are watching on YouTube, enter YouTube on a discount code. You'll get 10% off of everything. Okay, and there's the contest. Guess the closing price of the S&P at the end of July. You'll win a free 30-day subscription to all of our services, the annual, the monthly, and the video on demand. Total of $466 of subscriptions for free. Let's get straight into the analysis here. There's the subscription there. You can see the video on demand, the monthly contest, annual, and monthly subscriptions there. We're going to look at the S&P. This is an hourly chart. We've been looking for 5 waves up from the March 4 low. And it looks like we have it here. We'll mark the waves for you here from the March 4 low. We get a 1 up here, a 2 down here, a 3 up here, an A, B, C, 4 here, and a 5 here. This subdivides. This could be an ending diagonal with 4 overlapping 1 there, but it looks complete, and we had a nice sell-off today. So what can we look for as far as a correction of that decline? Let's go a little bit minor first, if we will. Let's get a retracement of this 5 waves first. We could do that on a smaller scale, and we may have it on another chart. But you can see right there the first wave down, or the A wave, hit right near the Fibonacci 382 at 42.86. I think that low was 42.89, and it might be a direct hit. It might be off by a point or two on that. Okay, so a minimum of this on the very, very short term, and that's the rise from the most recent June 18th 4th wave low within this 5-wave advance. But we're looking more at a correction of this 5-wave advance from the March 2021 low, and you can see our targets there are 41.17, and that would be to the previous 4th wave right in there. Or the 50% is 40.42, and the 618 is 39.66. So that's what we're looking at for this decline. I think I may have had that. There is the 10-minute, and there is that low there that we just detailed. I'll show you guys that last wave up. Get a retracement of that, and that is right near the 382. You can see this should be an A down, a B up, and a C down from yesterday's July 7th high. I think I can get even closer on that, and there is the July 7th high. Okay, so you can see the gap down. That should be A. B up falls between the 50% and the 618, and then we have a C down forming, or 1 down, 2 up, and the beginning of 3 down. Okay, so let's see if I think I even have that even more detail. I want to look at it from this 2 or B wave high at 1255. Okay, so we can get into right there. There is the 1255 high, and you can see this is the beginning of the third wave down. We have this is a 1 minute chart, by the way. A 1 down, a 2 up, a 3 down here, and a nice expanding triangle. A up, B down, C up, D down, E up. You can see higher highs and lower lows. That makes wave 4. Holds below the wave 1 low. Wave 1 low is there. You can see the dotted line. And the wave 4 high is there right on the 618. And that makes 5, okay? So that's 5 waves down of the third or C wave. And so far the retracement up ideally hit right at the 618 retracement level. So we went from the hourly to the 10 minute to the 5 minute to the 1 minute. But I want to look at this. Let me see if I can get to the extension here. Let's use this one here. Okay, so if this is, let me get an extension here. If this is 1 or A down here, and that is 2 or B up there, we can expect a Fibonacci 1-to-1 relationship at 42.58. Let's move that up a bit, and a 1.618 at 42.13. Okay, and I think we have a little picture of this here for you guys. Let's see. And here is the S&P. This is the hourly bar. And you can see we have 2 different Fibonacci time spirals. One from the 3-4 low here in black, and one from the May 7th low, high in red. And these have been unbelievably accurate with virtually no slippage. You can see the 3-4 Fibonacci sequence from there. There's a direct hit on 317 here. Next one, direct hit on 325. Next one, direct hit on 47. Next one was off by a minute. It was 428, and the opening tick on 429 made a new high, and then, as you can see, it went down from there. The next date in that sequence was 6-1 and another direct hit. So out of these, all of these turn dates, we have a slippage of 1 minute. The next turn date in the sequence is July 26. We can look at the one from the May 7th high, okay, and you can see here we have a direct hit on 512. The next one is 514. It was a Saturday on the 15th, so the market did the best it could. It topped or made a high the Friday before the Saturday because the market's not open on Saturday. The next one, 519, slippage of a day. The next one, 6 high. The turn date was the 28th. It was a 3-day weekend, so it was off by 1 trading day. That's what that TD means over there. The next one, 615, it was off by 3 trading days. And this last one here, 77, we had a 7-1 turn date, and that's 3 trading days with the weekend, or 5 calendar days. And here we go with 7-7. Here's our retracement levels. You can see that was on the chart before. I don't know how accurate I had that, but I've got 41.17. And again, that's in that, you can see the purple is the wave count there. That's within that previous 4th wave between 3 and 4. For that matter, the 500 retracement at 40.42 is also, and then we have 39.66. We need to see a move below this wave 1 high to get confirmation that we're getting more than a correction of this 5-wave rise from the March 4 low. Okay, and then we had the other one here on this minor degree up here to this last advance. So one step at a time. Okay, we'll see what happens. By the way, all these turn dates, boy, I may have it on that daily. All these turn date highs have been met with at least 3 days of decline, 3 consecutive days of decline after those highs. So we would expect that this 7-7 high will give us at least 3 days. And one of them, I believe it was this one here, was 6 days. I had it on the daily chart that we put out to our subscribers yesterday, and you can see with the daily bars, a minimum of 3-day decline after all these turn date highs. So we'll see what the next, what is today? Thursday? The next couple days, Friday, Monday, will bring, and possibly Tuesday. Okay, that should do it for the S&P. I want to look at the U.S. 10-year. This is U.S. 10-year Treasuries yield. Yield is the inverse of price, okay? You don't have a history here, but there's 39 years of bear market in yields that ended at the pandemic low in March of 2020. From there, we have a wave 1 up, a wave 2 down, and then 3 is subdividing 1, 2, 3, 4. You can look at this retracement here, and we were all over this yesterday when everybody was squawking about it and everybody's nervous about interest rates going too low. But this is just a counter trend bounce and a move higher. This low again marks a 39-year bear market. The end of it, it's huge, going back to what, late 70s, 79, 80, and then this is a move up. The trend, the bigger trend is up, but the near term, as you can see from the wave 3 high, is down. There's our Fibonacci retracement levels. This is 1.285%, 1.135%, and 0.984%. But what's interesting here, let me get the Fibonacci extension on here, and this is A down, this is B up, and you can see C down, and I'll put that in there for you guys. Give me a second here on the interest rates, the yields. So we have an A down, a B up, and a C down there. And let me make that a smaller degree of trend. That should not be that big. Let's go with sub-micro. There we go. C is exactly a 1.618 multiple of A, and it falls right in between the 382 and the 50% retracement. Can it go lower? Yes, it can hit one of those targets I just gave you and go all the way down to here. It can't wipe out all of that. And if it is a fourth wave, it should hold above the wave 1 high, which is right near the 618 retracement, okay, which is under 1%. So that could freak everybody out in the market when the bonds go under 1%. So we have to allow for a further decline. But as far as this ABC correction goes, it sits again right between the 382 and the 500, and C is an exact 1.618 multiple of A. I would do Tesla, but there's nothing new. Tesla's still got all of our same make or break points in there. So unless and until that changes, our wave count remains unchanged there. So I think I have this bonds here. Here we go. Same chart. There's the March 2020 pandemic low. There's 1 up. There's 2 down. Here is 3 subdividing or extending. 1 of 3, 2 of 3, 3 of 3, A, B, C. C equals 1.618 of A. There is 4, and there's wave 5 is a 1.618 multiple at 2.05%, and it gains equality with 1 right near the wave 3 high, which would be a double top at 1.77%. So that's what we're looking at for bonds. We'll see how that plays out over the next couple days. And again, the review on the S&P. Next turn date in the sequence is July 26 over here. We're at 8.4 over here. Every one of these highs, again, at least a 3-day decline. So we'll see how 7.7 plays out. Until next time, take care, everyone.